Warm welcome to everybody attending and to those watching this evening's Pensions Committee meeting on the Council's YouTube channel Hillingdon, London. My name is Councillor Stuart Mathers and I will be chairing the meeting. Details of the business to be considered today is shown on the agendas and copies are accessible online underneath the live broadcast. At the end of the public part of the meeting, the committee will move to discuss any confidential matters. The live broadcast on YouTube will then be cut and any members of the public present in the room will be asked to leave. Bit of housekeeping, we are not expecting a fire drill, so if the alarm goes off, please follow officers to the fire exits and out of the building to the designated meeting points. Also, a polite reminder to switch off any mobile devices, including your own. That is done. Online housekeeping, welcome to those online on Microsoft Teams. Please ensure any mobile phones around you are silent. Keep your microphone muted when not speaking, and only one person may speak at a time as I, Chairman, call those to speak. Finally, a reminder to anyone speaking today that your voice will only be audible online if the microphone is switched on. And moving on to the agenda, are there any apologies for absence?
No apologies for absence this evening, Chairman, although it's noted that Councillor Goddard and Councillor Islam aren't currently present.
Are there any declarations of interest in matters coming up before this meeting? So moving on to the minutes dated the 6th of December 2022. I'm hoping that everyone's had a chance to read the minutes. Are there any items for accuracy? No? Okay. Are we happy to receive these minutes? Yes. Agreed? Those minutes are agreed. Okay. And to confirm that items marked in Part 1 are considered in public and those in Part 2 are in private. So we move on to item number 5, the administration report. James.
Thank you, Chair. Key points to note are that Hampshire remain 100% compliant across all KPIs. Portal sign-up now exceeds that at when we left Surrey at 32.14% against a leaving figure of 30.95%. The pensions regulator data quality scores have improved over the last year, with the common score up from 83 to 89% and the conditional score up from 82 to 87%. Data quality areas are known to Hampshire and they are working through them as part of the data cleansing project. Also, delivery of annual benefit statements has now been completed with a success rate of 99.45%. So this is a positive and good result. And lastly, I should note that in January, the Secretary of State confirmed the merger of HCUC and RUTC, so Uxbridge College and Richmond College, and the project is in place to facilitate the merger of the two colleges. We are due to receive circa £40 million of assets, which I would like to discuss in Part 2, along with any other queries relating to this matter, if I may. With that, I'll pass back.
Yeah, I'm in agreement with that. Are there any questions on the administration report? Would you like our colleague to talk from Hampshire? Apologies, I can't quite see the screen. Roger, would you like to speak?
Good afternoon. Roger Hackett, I'm the Chair of the Pensions Board. Just a quick update on McLeod. Given the figures that you've set out in the report and given the current deadline of, I think, October 23, do you think we'll be ready for the implementation of McLeod?
We're working closely with James and colleagues and employers, but also the guidance has been issued as well to assist administrators now. All the consultation's been issued around where you might have missing data, etc., and how best to approach that and deal with that. So I think we're in a really good place as we approach the deadlines, and we'll continue to work hard with employers and to make that contact to get as many returns in as we can.
Thank you very much. Good.
Do you mind turning off the microphone? Frustrating. Are there any other questions? No, just a note of thanks for continued improvement, performance in terms of hitting all the KPIs. It makes a big difference, and I know that officers particularly find that a lot more useful than any other situation. So much appreciated. There's no questions from myself. Feel free to leave as you wish.
Thank you, members. Take care.
So can I get agreement that we note the administration update, that we note the data score update, and noting the merger of HCUC and RUTC, which we will also discuss later. Is that agreed? Agreed. Item 6, valuation report and funding strategy.
This report shows the final outcome of the 2022 valuation and shows a slight improvement in the funding level from 87% to 88%. The overall fund employer contribution rate has fallen slightly from 20.2 to 19.6%, and the target return required by the fund has increased slightly from 4% to 4.1%. The funding strategy statement was sent to all employers for consultation. Unfortunately, in line with previous consultation, we received no responses. However, we have contacted 2 employers directly, again specifically highlighting their increase in contribution rates. If I may, Chair, I'd like to pass over to Craig for him to deliver the results and his comments on the evaluation process.
Craig.
Thank you, Chair. Thank James. So I think the key point here is this is us at the end of this year-long process that we do once every 3 years with our LGPS funds, and I think the key point is that a successful valuation is one that passes with relative lack of incident or any risk reports or something that goes very, very, very smoothly. And I'll be happy to put on public record that this has been the smoothest of valuations with the Hillingdon Fund. Of the last sort of 5 triennial ones that I've done, right from the start of the process to the very end. So just a little bit of comment on record. Thank you to the fund officers for their engagement and provision of all the necessary data, including the cash flows, and also to the Hampshire administration team for the first time they were doing this with us for this valuation. That was a very good process as well, and they've been a really welcome addition. We've also had, as James just mentioned there, some good engagement with the employers that we need to have engagement with, and there have been a couple where there are quite unique circumstances this time round, where we've had to really engage. One being, for example, the college, which is going through the merger, and you'll be discussing that later as well. So within the papers, there's 2 items that you need to approve. The funding strategy statement is completely final and done. As James mentioned, it's been out to consultation. It's already been in front of committee, so that's just for final approval. And then the valuation report, it needs to be logged with the government by the end of 31st of March 2023, so we've got about 9 days left to get that finalised. The version you see, obviously, in order to get it into the papers, is draft, but it's essentially final. There's just a couple of semantics to update. A couple of dates to do, and a couple of small bits of text. So they'll just be done in the background and then logged to the government. And the only other piece that's missing on this is there's an appendix at the back which is not currently included, and that's only because we've only just got the specification for that from the Government Actuaries Department. So all LGPS funds have to fill out what's called a Section 13 dashboard, and it goes in the back of every single fund, and it's a couple of sort of consistent metrics that is able to rank all the LGPS funds on a very consistent basis, and that's something that the Government Actuaries Department takes away and does various analysis on over the next year, 2 years. Now we've got the specification for that. We're working on that in the background, and we will slip that in over the next couple of days, and that will be the one that's on your final document. It's the last appendix that goes in the report. So other than that, the report is completely final. And that's all I really had to say, unless anyone has any questions on either document.
Are there any questions? Can I just ask that a copy of the final report is sent out, just for noting from councillors? We will approve them in a moment. Can I also ask that we send out our thanks to those mentioned, all those involved, including our officers here at Hillingdon, and our administrators, as well as those involved at Hyman's. Yes.
Just one point of clarification. I can see that the primary rate has gone down, but then we've got the secondary rate. So say for Hillingdon as the biggest member of the fund, the actual cost is going to be 24.1. This is from the certificate in the appendices. What was it's probably in there somewhere, but does that mean that the overall cost has gone down? When you added the secondary and primary rates together for the period from 2019, what were they? I couldn't find it in the report.
Craig, you're on mute.
I need to take that one offline if that's okay, and then I can give you a response. I'll give the response to James if that's okay.
It's just a matter of interest, don't you?
Yeah, no problem.
And just a second question. There's some quite high total figures for some of the employers. Over 30% in here. You mentioned that there have been discussions with these employers. They are fully aware of what is going on, are they? Because I know the problem that you don't get feedback, you don't get response, and then you get a panic telephone call. So these people who are over 30%, I mean, some are 35, 36%, they do know.
Well, they do know because...
I can take that one. Yeah, I can take that one. So a few of the employers will have been on those rates before. Part of it is to do with either their relatively poor funding position historically, which meant they were already on a relatively higher rate compared to the rest of the fund, or they might be a more short-term employer, for example, a contractor who's only in the scheme for a few years, and being in the scheme for a few years is riskier due to things like the fund's investment return, which is obviously a long-term target, and so it's riskier for a shorter-term employer than it is for someone like a council in the long term. So those ones were already on. If there's anyone that has had a particular jump in rate, and there was two that James mentioned, we've specifically reached out to them extra to double check that they're aware of what's going on. You can only do so much if people don't engage, but we've been very much on the front foot there to ensure that these things are known if we think anything was going to cause a particular problem.
Thank you. If there's no further questions, can I get agreement for the draft triennial valuation report and approval of the funding strategy statement for London Borough of Hillingdon Pension Fund? Is that agreed? Agreed. Nothing further we need to agree in relation to that item, though. Thank you very much, Craig, for your input. Much appreciated.
Thank you all. Cheers. Have a good meeting.
So moving on to investment strategy and fund manager performance, item 7.
The fund returned 0.05% this quarter, which, although small, is ahead of the benchmark by 0.6%. Longer-term figures are positive at 1.01% and 2.33%, but behind the benchmark and below the target 4%. Since inception return is, however, 6.32%, and that's an annualised figure. The fund value at the end of December was £1.15 billion, up £1 million from September. And I did check this morning, and the unaudited figure is £1.17 billion, so £20 million increase since the December figure. Volatility in listed markets has created headwinds and performance against some of the illiquids. Headwinds against performance for the liquid investments, so the equities, etc. But the illiquids have proven to be resilient and have provided a positive return. AEW, property, private debt and infrastructure have all helped bolster returns. Conversely, though, the long lease property has detracted from performance. It should be noted there is a discrepancy in the AEW figures between AEW and NT, and we're currently discussing that with the performance manager at Northern Trust and AEW. Asset allocation is being discussed as part of the investment review, but is broadly in line with the current benchmark, other than the private debt and infrastructure elements, which are due to be drawn down. Lastly, in the latest budget, I just wanted to say that it was announced that funds should pool all their listed assets by 2025. I'm not sure that's something we're going to discuss a bit later on when we talk about the responsible investment strategy. Those are the main headlines, but I'm happy to answer any questions, and perhaps we want to discuss in more detail some of the items in part 2.
Are we happy to discuss in part 2? Okay. Can I just get a agreement that we're going to note this report? Agreed. Thank you. Responsible investment update. Part 1 is item 8.
Here we have the usual information on voting and engagement by LSIV and LGIM, which demonstrates the fund is an active investor in terms of ESG. Although committee have received a presentation from LSIV on TCFD results, I've included for completeness and to demonstrate our efforts in achieving these results in a public document. I also intend to add our achievement to our web page, so I will set that up later this week. This week it was also announced that LSIV TCFD analysis we received previously and we were going to pay for is now going to be free, so that's also positive and saving the fund money. This item also includes a progress on the stewardship code and asks the following, that following our values and beliefs session, committee approve the updated responsible investment and conflicts of interest policies. I separately sent a tracked changes copy of both of those, which you would have seen only minor amendments, and there were no major deviation from last year's approach. As we need to submit the stewardship code prior to the next meeting, officers asked that a delegated authority is given to submit the report, and of course I can send around a draft copy for comments to committee before we send it off, but I'm happy to sort of proceed on either way. So with that, I'll pass back for any observations or questions.
Yeah, I have one observation. Unless Izzy wants to speak first.
Not really. I mean, there's not much more to add on the various policies, so there were minor changes.
Okay. So just on page 129, it talks about pooling as part of the responsible investment policy and a commitment to be at least 95% of investment assets pooled. I believe in our discussions around pooling generally, that we were generally thinking around, or we hadn't agreed a number, and I know that there's other guidance that's coming out or has come out, and I believe this is historical kind of government advice. So I'm just looking around at officers for how we might better word this, because with some of our decisions around off-pooling and on-pooling recently in our strategy, this may inhibit us from doing so. James, I'm happy to let you come with words of wisdom if you may.
Well, yeah, I think the 95% figure was based on old sort of guidance from the government that was suggesting that you should have 95% of your investments pooled by a certain time. So that's what we put in, because we obviously wanted to support what the government was suggesting as a guideline. But since, as I mentioned, the budget's come out, and now they're suggesting that all listed investments should be pooled by 2025. I'm wondering if we should actually, or Councillor Mathers is wondering if actually we should reduce that 95% and change the wording slightly to sort of be in line with what the government is recommending in the budget. So yeah, I'll sort of pass back to advisors for their thoughts as well.
Yeah, James, it's David. So just on that, I think it would be sensible to align with the latest guidance, and just in terms of for the broader committee, all your listed assets are currently pooled on LSIV. The only assets that aren't within the pool are the unlisted assets, so property and private debt and infrastructure. So in terms of meeting that requirement, you're already in line with it.
Might just add as well, I mean, obviously we're talking about the investment strategy in part 2 and potentially an allocation to a listed asset. So again, we need to be mindful in that decision where we're going in terms of this new guidance as well, in terms of going off pool or not.
Can I suggest that we reword this and come back to it? I would want to show in this our commitment to pooling, which I think there's consensus around. We're not fighting the government on this at all, and in fact we've shown that through our actions. but it would be useful to draft some wording. Maybe that wording could be shared with myself and others on the committee, so we can agree just that paragraph to make sure it's in line with the new legislation, but equally doesn't inhibit us on our strategy. Yeah, Claire.
It's not legislation yet, nor indeed we've not even got guidance either. So, there's an obvious intention there, but I don't think you need to be worried. You are already there. Whatever that guidance, if it says what they've said in the budget, you are there already. So I don't think you need to worry about it. But it's not yet out, and we'll have to look at it when it does come out.
If we can find some loose wording then, so that we can not preempt anything anyway, that would be amazing.
But I agree,
we are there. Yeah.
I agree that we probably shouldn't say it's 95% though, and we should change the wording.
Does the committee agree that they're happy to change that wording outside this meeting to make sure it's what it needs to say? Yeah. Makes sense. Yeah. Okay. Claire.
Just on a separate point, I was looking at the climate analysis, and it's good that the fund has done this. There's 2 points, I think, to recognise when the regulations do come out to compel you to do this, there could well be more to be done. So, for example, potentially setting targets for some of these metrics, or at least one metric potentially. So there's more to be done on this, so it'll be something to keep a look at over the next year. But also, I think in what you've got, there's actually some good messages there. But I would argue that your members and stakeholders are going to struggle to interpret this and understand it. So I think if you have time, it would be worth packaging this up with some plain English, and to put this on your website. Yes, have the analysis, but actually put some very basic language there to show what it actually means, because I think you can get some really good publicity on this, which would be I think it's a positive. Yeah.
Thank you, that's really helpful, and that's a good suggestion. We are moving in the right direction, and our responsible investment policy is pushing us further in that way, whilst not inhibiting us with any financial challenges. So, I'd very much like that to be in plain English on the website, if possible, if we can just minute that. I think these things are extremely difficult to understand, and even with the good work we've done in carbon reduction, it doesn't always relate to some of the other climate impacts that you would think would logically make sense. So the more explanation we can get, the better. It would be useful to understand from LSIV how they might adjust their reporting in order to fulfil some of the extra requirements we think might come down the line. I'm quite happy to raise that, or for any of us to raise that with them. Claire, have you got any update?
I think we need to wait for the legislation actually coming out, which should be imminent, so when that comes out, it will either restrict or it'll give you freedom, and then it'd be time to look at it at that point.
Yes, my intention is not to put the cart before the horse, but I think it's just worth just nudging them to remind them that we expect answers as soon as they're able to. Yeah. So going through unless there's any other questions, going through the recommendations then, are we happy to note the ESG activities and compliant efforts? Agreed. And the TCFD report? Yes. I'd like to note the stewardship code progress, and I'm happy to delegate. It would be good to see the draft before it goes to final submission. Are we happy with that as a committee? Yep. And are we happy to approve our updated responsible investment policy with the amended sentence around pooling? Yes. Yeah. Yes. And confirm our conflict of interest policies remain fit for purpose? Agreed. And note the ESG annual assessment, which we're going to move and speak a bit more about in part 2. Are we happy with that? Yeah. Noted. Brilliant. Thank you. We're now looking at item 9, the risk register.
As requested by committee at the last meeting, the risk relating to liquidity has been split into 2 separate risks, one relating to investment liquidity and one member liquidity. The new PEN 10 risk has been designated as a low likelihood and a medium impact. Also, as discussed at the last committee meeting, due to our lean team, we have added an officer key risk to the register. This has been designated at a medium likelihood and a low impact. Happy to discuss or answer any questions.
Are there any questions on this before I ask one? No. It was more for discussion than necessarily an immediate change, but I did wonder on Pen 8. So we have a medium risk here for the financial loss through negative impact of ESG matters. My current thinking, and I'm hoping to debate on this, is that with ESG becoming so integral to fund managers and the awareness is raising in terms of pooling and on pension boards, whether the likelihood of a negative impact because of ESG would be reduced. I think the impact would still remain medium because of the volumes involved, but whether the expertise coming into the sector, and this may be a premature thinking, but whether the expertise coming into the sector and the way in which it is now becoming very much integral in many conversations, that actually increasingly the awareness from fund managers around the financial risks and the ways in which they balance that in their portfolios, for example, around ESG, may not be as high as a medium. I'm happy to open that for discussion. Does the advisors have any thoughts on that? I was just thinking about it the other day, just balancing, is there much more risk with ESG than non-ESG, particularly as ESG is getting more focused now by fund managers and the only example I can think of financially is where we're not invested in energy companies in some of our funds and they've made a huge amount of windfall profit. So there has been a financial risk, but over the term of 5 years or so, the funds, whether they're Paris aligned or not, tend to even out. So I would open any thoughts.
Yeah, I can maybe comment on that. So I think the thing that's changed in most materially in the recent couple of years is the fact that it's now common consensus to classify ESG specifically as financial risks. So they sit alongside interest rate, credit, equity risk, so all the other financial risks. So from that point of view, the managers will be taking them more seriously and analysing them in their usual risk management processes alongside those other risks. So from that point of view, it should be on the risk register as a risk alongside the others there. In terms of the medium categorisation, I guess that's debatable. So it could be that the managers are probably slightly not as developed, shall we say, in managing those ESG risks, just because it's a newer phenomenon and a new area for them. So is that risk more likely to bite from that point of view? Potentially, because it's just a newer area for them, and there's no way around that. Does that mean they're more likely to kind of bite? As we've seen, we just had a kind of semi-banking crisis, so any risk can rear its head at any time, so it's difficult to predict from that point of view. But certainly should maintain on the risk register, I think, without any kind of strong steer either way. Medium feels like a fair place to be, I think.
Any other thoughts? It does absolutely need to stay on the risk register. I just wanted to get a sense of where the ESG development was and if that had made an impact.
I think we could debate that for a long time. I think my view would probably, well, what difference does the actual rating mean to the actions? And probably not a great deal. So that's what really matters. Are you actually managing the risk in the first place? The only other thought I might have is that the ESG is applying to all your assets, not just the ones that are actively managed. So you have a lot of passive assets in there, and that relies on, good ESG management relies on the whole, all the companies in the index, which is a big universe. So although you've got a lot of good ratings on some of the managers, it's not necessarily that all the companies are doing well. So, you could debate it one way or the other, but I think you're doing a lot on the action, so it ultimately doesn't really matter, I think.
Any other thoughts? Happy to take that advice completely. Yep. Was just wondering myself, because we've seen the advancement, and it's obviously something that was dominating our agendas, and we're putting a lot of resource behind, and I wouldn't want us to be needs to be mindful of risk when it comes to how the investment world is adapting. Are there any other comments on the risk register or on that point particularly? Yes, Claire.
I just had one observation really. It was around the new risk Pen 14, which was the key officer risk, which obviously James has just said has been noted, and I noticed that it's been assessed with low impact, and I just wondered what the evidence of that might be. Would it perhaps you're quite happy that the impact is low, but it's just how that's been categorised and how that's been quantified. I guess that would be my question really.
I based it on the financial impact, I think, which was where is low? 500k. So I thought that probably we would be able to cover an officer who left with 500k. So that was my logic in terms of classing it as a low impact from a financial perspective.
So I wonder if with those individuals, is there any key risk in terms of strategy, managing of partners, etc., stakeholders, but also if there are any large transactions that we know are coming up where that is a greater financial risk. So if suddenly someone was not available, it would impact that. I know we have a small team, but they're quite flexible in how they manage things.
I guess yes. Maybe then, I was thinking more, of replacing that member of staff with somebody, and we'd be able to cover it with 500. But if that member of staff wasn't there and something didn't get done, then yes, it could be a lot more than 500,000.
That's kind of what I was thinking. It was around, what happens, your accounts don't get signed off, you have investigations from regulators, you have reputational damage, for example. There's lots of other potential, as well as the investment trading and cash flow and pensions flow. But I don't know what exactly the officers do or where there are key individual risks. I just think maybe just some exploration of that might help. Focus the minds on where the risks are really.
Yeah, these were my suggestions. So I'm happy to discuss them and increase them, and perhaps say my thinking was very narrow, and actually thinking it's slightly wider. It probably should be more than a low impact. It should be maybe a medium impact, or maybe even higher. I don't.
I should imagine it's a risk across the council, isn't it?
Yes, I guess. Yeah. Andy, would you like to come in?
Yeah, no, I think it's a good point there, but I think we'd probably set it in the context of having some other expertise across the council and wider risk management mitigations in place. So we'll take it away and have a look at some of the wording, because I think some of the limitations perhaps of our presentation is we're not absolutely clear or detailed in terms of some of the mitigations we've got in place for some of the risks, and it's particularly relevant for that one. But we certainly, there is, in terms of mitigation, access to buy in the expertise. If you've got a potentially big transaction, given the size of our finance department, we've got other people who could come in and would buy in certain specialist expertise if we had a gap. So I think there's ways of mitigating that. So at this point I'd be tempted to leave it at that level, but we'll go away and sort of look at the wording and presentation of that risk, with it being a new one. I think it's helpful to have a bit of a debate on it.
Can I ask, in terms of the longevity of this risk, so yes, in the short term, buying in, it does solve the problem, but with recruitment, as it sometimes is in local authority, how we might be able to just add some mitigations around the short term and the long term of this risk. Because if you could never recruit as pension specialists, the impact on both committees' decisions, transactions, and also other accountable measures such as the board would be quite high.
Yeah, I think this is something that myself and James have been actively discussing. We've got a really challenging market generally for finance professionals, so we're looking at ways we can sort of brand or make the offer more attractive. We do have a couple of options within our current team in terms of development that we're currently actively working on. So I think we're actively working on that succession planning, and again, that's all part of the risk mitigation. So we are working on that. But as I say, at the moment, and perhaps we should be noting here, there's a really challenging recruitment market for permanent staff in this area. And also we put in place measures to make sure we retain our expert and better staff as well. within the scope of that work.
Okay, so I'm going to recommend that we keep this risk as is, but ask officers to go away and think about how it might, to explore the risk further, and also whether there needs to be extra aspects of that risk divided out, and come back to us at a future committee, or if the risk seems higher on analysis, to come back in between and we can call a subgroup or whatever's necessary to reassess that risk. Are we happy with that as a committee? Yeah. Okay. So to agree the risk register, is everybody happy? Yep. Yeah. So we're now going on to the work programme and training log.
In this report, I've listed the key items for committee to discuss over the next year and invite any other topics for conversation. Also, we have excuse me, the training log, which shows a lot of progress over the year. If I may, I would like to pass over back to committee for any comments.
Thank you. Just a reminder to committee members that we need to continue our development and have our basic knowledge in place as well. There is also a number of different online training courses that pop up now and again that we should probably open out to the whole committee. I know that Councillor Bells and I are attending one in the near future. This one's particularly on TCFD, so it may be of interest to members. The only thing I wondered we may want to add, if we're submitting the stewardship code of conduct, if we wanted to make sure in the next meeting it was listed as an item of noting, and with the final, or a summary of the final submission. Is that useful?
I can see, I mean, there would normally be covered under this response to investment, but I can list it as a separate item if good.
I'm quite keen to shout about it, as it were, particularly the work that's been done over the last couple of years, and to make it a separate item does give it a little bit more of that energy that's actually been put before the committee. Are we happy to note? Yeah. Yeah, just if you could just update James with the Aon bits and pieces outside the meeting's fine.
Yeah.
Just so we've got a complete record. And I think everything else is up to date, unless anybody sees anything missing. Thank you. Okay, with that we'll move on to the Pension Board annual report.
It is horrible. Printer's made a mistake.
Thank you, Chair. And thank you for this opportunity to present the 2022 annual pension board report. As the report sets out, SAB say it's good practice for a pension board to set out an annual report. I think that is clearly right, because it's important that the pension board should present an annual report to the committee, so you can determine whether the board is meeting its obligations in terms of the regulations in respect of scheme members and is operating efficiently. Also, it's an opportunity for us to put this onto the website later so that scheme members can be assured that we are carrying out our duties properly. The report deals with both what we've been doing and what we're hoping to do. Of the things we've done, the one thing I'd like to draw to your attention is cyber security. This has been a long-term project which sort of, in a way, sort of culminated in 2022. And it's an important area because pensions boards were both tasked by the pensions regulator to look at this area, and we know from our own experience that some of our partners have had difficulties with cyber attacks. So this work has been going on for a number of years, and I'm pleased to say that this has resulted in a number of reports coming to us which have given us the level of assurance that we were hoping for, that the systems that we currently have in place are fit for purpose. However, that did of course come with a caveat that because this is a fast-moving area, we need to keep on constantly keeping this area under review. Secondly, of the things we're dealing with in the future, many of the items in there you will recognise and know about. The one I would like to mention to you is the one about board effectiveness. We've already done some work on this. The government advises us that boards of the public sector should regularly carry out a board effectiveness review and provides guidance on how we should do that. Pensions Board has used this guidance to complete a self-assessment review of its effectiveness, what outcomes it produces, and the behaviours we have within the board. The findings are with James at the moment. We had some meetings that he helped us with, and these are going to be reported to the next Pension Board on the 26th of April, and they will therefore be available for Pensions Committee to look at. Finally, I'd like to reiterate my thanks to my Pension Board colleagues for their hard work and dedication, to the officers who support us for the same hard work and dedication and their patience in dealing with our queries and questions, and to thank the Pensions Committee for your willingness to involve the Pension Board in all of your work. That is much appreciated. If there's any questions that you've got, I'd be pleased to answer them.
Are there any questions? No? Can I thank the Pension Board for their commitment and their work effort? There is a few of you in number because it's a small board, but and I know there's often a lot of pressure with a lot of work to do with some large tasks such as the different legislation changes and the different training and work requirements. So a genuine thank you from us for your continued support and critical friendship, which is the best way to describe the board. And I'm pleased that there's a strong working relationship between both the committee and the board, so thank you so much. Are the committee happy to note that report? Yep. Thank you. Okay, so we've now finished our public part of the meeting. The committee will shortly move into a private session to discuss matters that are of confidential nature. The YouTube broadcast will come to an end, and we kindly ask that any members of the public present please leave the room. Thank you for those attending and watching online.